You can go ahead.
Okay, great. Hey there, everyone. My name is Kim Krompass, and I want to welcome you and thank you for taking the time to listen to this presentation. Today, I'm going to talk to you about a few important ideas, all with the simple goal of completely changing the way you look at your trading, the markets, and how you might make money. During this presentation, I'm going to show you what I have found are the 3 key strategies that have the power to transform your Forex trading. You'll also see why my method works so well for so many traders and how to make it work for you. So let's get started. Okay. My screen's not moving. All right. So before we dive in, it took me years, thousands in losses before I figured out how to be consistently profitable as a Forex trader. This presentation or workshop, while I know it's going to change how you look at the markets, it isn't going to allow you to replicate my success overnight. It will start you on a journey, though, to becoming consistently profitable if you are open to learning. And there's a couple things I just want to say aside from this, and that is trading is hard work. There are no holy grails. It is not a get-rich-quick method, and there's a lot of risk. So you might be asking yourself, why should I listen to you? And that's a good question. How is what you are going to talk about today, Kim, going to help me with my trading? And I would ask the same question. All right, so who am I? Who is Kim Krompass? I'm a CPA, California. Yay, California. Trading for almost 20 years. I've made a few small fortunes both as a business owner and as a trader. I've lost and recovered those fortunes. And I've been a Forex trainer and coach since 2005. And I founded the Price Action Traders Institute in 2012. So about 8 years ago. But quickly, I want to tell you a little side story. And it all started at a spa, of course. My comeback story as a trader and the seeds for what would later become known as the Price Action Traders Institute would take place here in the beautiful California wine country. I was living in San Francisco at the time, and I was gifted a weekend getaway at the Hotel Yountville, which you're seeing here in front of you. Yountville is the home of the world-famous French Laundry restaurant and the Bouchon Bakery, in case you don't know. I was ready to throw in the towel after taking a round of staggering losses. I was unable to trade, and honestly, I was miserable. I walked away from trading and never looked at a chart for at least 6 months. I also disengaged from the trading community completely. So how did I get to where I am today? Like a lot of people who suffer big losses, I retreated and thought I would never be able to trade again, but something was nagging at me about failing and getting back up. You know, this wasn't the first time I had failed, and maybe some of you can relate to that. And also, maybe some of you can picture this. I was away here at this beautiful spa location in the wine country, and I started thinking about all the things I loved about trading and I hated. And I decided to get a notebook out, and I wrote them all down. On one side of the paper, I put all the things I loved about trading, and on the other side, I wrote down all the things I hated. And after doing this little exercise, it was as if I had this sudden burst of excitement, because in that moment, I knew if I could just go back to the basics of trading and work on my mindset at the same time, I would have a good shot at success again. I was a driven person. I've always been driven. No one was teaching how to use a simple price action trading method to trade Forex. And to me, that was obvious. So the first thing I did when I got home was this. I deleted all the online trading courses I had purchased, along with PDFs, books, notebooks, 3-ring binders. I had it all. I also deleted all the indicators off my charts. And I stared at the chart. And what do you think I found? I found I could clearly see price action. It had been there the entire time, but it had been buried under all sorts of indicators, trend lines, pivot points, moving averages. And boy, after I did that, I was really motivated to start trading again. So I want to ask you, have you ever felt like this? Maybe overwhelmed with unnecessary financial information? Or how about this one? Taking trading advice from marketers, not traders. And there's still a lot of those people out there. And they're mainly, I hate to say it, but guys, feeling like you just can't wake up from the fog of trading confusion. Well, I did. And I no longer wanted to feel like that. So back to that spa trip. After I came home and I cleaned house, essentially, trading house, I went on a mission to find out exactly what would work not only for me, but also for traders just like some of you listening. Trading had become so complicated and puffed up by marketers, not real traders. I was tired of all the marketing hype and confusion. How many of you in here have experienced how complicated trading can feel at times? Yeah, I bet you there's a lot of you. Here's the thing. As I mentioned, I'm a CPA, and I think in a very organized and structured way. And yes, before you say anything, I know the markets aren't organized and they're certainly not structured, but I was determined to use my CPA skills and bring organization and structure to a method at how, or a process, at how a trader could look at the randomness of a market and trade it with a high level of confidence. I knew if I could create that structure in a process or in a method, I could use it in my own trading and also teach others to do the same. And that became the foundation for creating the Price Action Traders Institute and the Price Action Traders Method. So here's the method. Let's quickly talk about it first. It works with small accounts and large accounts. It's so simple a teenager could learn how to use the method or apply it. It requires using tight stops. There's no more hanging on and letting a trade breathe. Has anyone ever done that? I know I did. All of our trade planning, executing, and managing is done on one time frame only. It's price action based. We don't use indicators, chart patterns, algos, robots. Nothing like that is ever used. And all trades, this I think is the best part. This was the best part for me. All trades must be closed at the end of each session. So I had the method. And then I created the Price Action Traders Institute. And what is that? The Price Action Traders Institute is really a community, a group of enthusiastic and success-driven Forex traders. I train and mentor all levels of Forex traders. So whether you're a beginner, you've never seen Forex before, or you're an experienced trader, which you'll see some, I want to say, recommendations from traders who have a lot of experience and who have come through the Price Action Traders Institute. I started the membership, which is the first service I offered back in 2012 called the PATI Membership. And then just last year, in April of 2019, I released a complete online training course called Command Your Trading. So here's what some Forex traders who have had some experience say about the PATI training and the method. I've been trading for 5 years. A lot of ups and downs. I could not find consistency until I found PATI. Thank you, Kim. I've spent thousands of dollars on education and software over the years, but nothing compares to the education and mentorship that I've gotten from you. Some days I have to pinch myself because after 14 years, I am finally making money. I will be getting my first check from the blank fund. That client is now trading and is still with me. He's been with me since inception of the Price Action Traders Institute and trades for a fund using our strategy. So here are the 3 key strategies, because now let's get to talk about them. We use predefined tight stops and low leverage to reduce and control risk. Number 2, quickly and easily, we plan our trades in 20 seconds or less. And develop the mindset of a confident trader by letting go of your indicators. So strategy number 1. In strategy number 1, I'm going to talk to you about how using predefined, predetermined, tight stops combined with low leverage will help you become a more profitable trader. It is actually a force to be reckoned with. And I've heard some other presenters this week talking about this very thing, about keeping stops tight and not over leveraging. It just can't be said enough. So why is this important? And you might be asking, well, how is using tight stops that are predefined going to help you make more money? And that's a great question. Well, the first thing is knowledge. When you know exactly what your downside is before you enter a trade, it gives you choice and control. When you know what the threats are out there and you proactively do something to mitigate them, you can drastically reduce being blindsided and potentially suffering heavy losses. For instance, yesterday, there was a surprise interest rate cut, an emergency cut, right? And because of that, the markets went nuts and it blew everything up. So if you did not have a tight stop in, or you did not have a stop that was well placed, or you were over leveraged, you probably suffered yesterday. Okay, let's see here. All right, fear about the future is going to be reduced because you're going to know exactly when a trade is no longer going to work and what you can do about it. And you can also learn, and we teach you re-entry options. So if a trade gets stopped out very quickly, there's re-entry options, and you decide based on a set of criteria whether or not you want to get back in, and you know exactly how to get back in. You never have to worry about where to place your stop loss again. This is huge. And the reason it's so huge is because you don't have to struggle like so many traders do with, where do I place my stop? Do I put it on where support and resistance is on the 1 hour chart, the 1 minute chart, the 4 hour chart, the daily, the weekly, the monthly, the yearly, my astrological sign? It eliminates all of that and is such a huge confidence builder. So let's talk about the 3 types of trading risks, because knowing how these work together is actually a big boon to your trading success. So the first one is emotional risk, the second one is market risk, and the third one is trade risk. And I'm just going to talk briefly about each one of those. So emotional risk, this one is 100% in our control. The thoughts we think, the feelings we have, our reactions when we trade are completely under our control. So have you ever felt like this? You start off, you're excited, you take a bunch of losses, you decide this is hard, and then you come back and you say, it's working for me. Oh, this is going to bankrupt me. I'm good. I don't know why it gets, and it's like this big roller coaster that you're seeing on here. Most people, including traders, especially traders, don't want to think or talk about their feelings or their emotions. How many times have you heard in the past, oh, keep your emotions out of trading? Well, it's impossible. In order to make a decision, you need to have an emotion behind it. And they also believe that if they do talk about their emotions, things are going to get worse. And that actually couldn't be further from the truth. It's been estimated that over 90% of traders fail just due to their own psychology. We know that trading takes place in our mind. And the more that you know yourself and can understand your motivations, in other words, you know why you do the things you do or why you don't do the things you want to do, the more in control you'll feel both as a person and with your trading. Why do you think there are so many good coaches like Mandy, who's been on here and has actually talked to my group just last year? And she'll be presenting again today. She works with traders on their mindset, or famous books that have been written by Mark Douglas or Denise Schull. Everyone knows or should know by now how emotions inform our behavior. And without knowing how we feel, we are doomed to repeat behavior that we might otherwise want to change. So the second type of risk is market risk. It's 100% out of our control. We never know what a market is going to do. And market risk is typically a tough one for most traders to accept, because as humans, we want to believe that we can control or dominate the market with our strategies, our methods, or even our indicators. In fact, there's an entire industry built around analysts making predictions about what the markets will do next. Analysts, though, are not traders. And the truth is, we never know. We have zero control over what the market does, nor can we possibly know the outcome of any trade ever. Traders are misled into believing they can predict what the market will do with an indicator or a set of indicators. After 20 years in the Forex market and other markets, stock and options, I know this is not true. In fact, I would stake my reputation on this statement because I've used a lot of the indicators out there. To believe that you or your strategies can predict what a market will be a source of great pain. If you get this lesson now and you understand that it's completely out of our control, it will help you immensely as you work to become a successful trader. The third type of risk is trade risk. And trade risk is like emotional risk in that it is 100% in our control. We are the judge and the jury when it comes to the size of our losses and our wins. We determine exactly how much money we are willing to lose and how much money we are willing to make on our trades. Have you ever moved your stops or traded without stops, or know traders who do that? Or some traders go to bed hoping they're going to wake up to a miracle on a trade. Some traders hope for their trades to come back to break even or profit. You know, smoking the old hopium pipe. And if you're someone who does that, oh, please stop doing that. Know that each one of us decides how much money we are willing to make and how much we are willing to lose. So the number one way I teach traders how to reduce risk in order to maximize a trade's profitability is through proper position sizing and using a tight stop. I recommend in our group for traders, especially new to the method or who don't have much experience at being consistently profitable traders, they risk no more than 1% on the high end and 0.25% on the low end. And everyone uses the tight stops from a recommended list of stops, which we're going to get into. But let's look at and read what one of the world's most successful traders has to say about taking small losses, Paul Tudor Jones. And if you don't know who he is, if you're new to trading, just Google him. There's a whole ton of information about him. To make great sums of money, you first have to learn how to lose much smaller sums of it when you are wrong. When you become accustomed to booking small losses, you will notice how you start to feel emotionally available to actually look for other potential trading opportunities. Here's what a couple of our traders have said about using predefined and tight stop losses. I'm really enjoying this strategy. It's always been the risk management for me. This is a beautiful way to trade as it has tight stops in place. Or this one, who is a fundamental trader who uses our method. I'm really happy to have found PATI. Combining it with my fundamentals, especially the tight stops, has really changed the game. So here's our list of recommended stops. And all stops have to include your spread. And of course, we go into this more in detail in the course and in the membership. But on the euro and the Swiss, we use 8 pips. On the euro yen, the pound, the Aussie, the dollar yen, the CAD, and the New Zealand, we use 10. And then pretty much on all the rest, we use 12 pips. So you can see the range is very tight. It's 8 to 12 pips. Here's what someone said about trading with tight stops, who's been trading for quite a while. Kim's method is the only method that has really drummed into me the importance of a proven method and tight stop losses. This was a complete change in direction for me, and I'm finally profitable after 18 years of being stubborn and trying other systems. I wholeheartedly recommend Price Action Traders Institute to new and experienced traders who are not yet consistently profitable. So just a quick recap of strategy number 1, drastically reduce your risk by using predefined tight stops from a recommended list and low leverage to become a more profitable trader. Strategy number 2, how to quickly and easily plan your trades in 20 seconds or less. That's right, you heard me, 20 seconds or less. Do you or have you ever felt like this guy? You're looking at your charts and you're trying to come up with a trade plan. This is exactly how 90% of traders feel when they sit down and start looking at their charts to come up with the trade plan. It's like information overload coming at them. I used to feel this way, was staring into the matrix of my charts and not really knowing where to begin or what to do. For a lot of people, this is their reality. But after today's presentation, I really hope it's not you. So, what are the benefits of using a 20-second trade plan? Well, it's an incredible feeling once the confusion over what you are looking at is gone. It's this moment of zen for a lot of traders. You don't have to spend hours looking at charts to identify a trade. You can use it on any currency in other markets like gold, silver, the DAX. The plan tells you exactly where and when to place a trade, and I guarantee you will never look at a chart the same way again. So why do traders love the 20-second trade plan? We know the benefits, but why do they love it? Well, the first thing is it's like really simple. There's no indicators or patterns to look at. There's no software. You don't need any special software. There's no complicated spreadsheets. Anyone can do it, and I guarantee you will love it too. Here's VJ. He's a doctor who's in our group, and he trades the PATI Method, has been around for years with us, and someone was asking him about it on Twitter, and he said, "You came to the right place, brother. The PATI system is so easy to follow and execute that you will start questioning if trading could really be simplified this much." So the 3-question, 20-second trade planning process is a game changer for Forex traders. And I want you to just imagine that you're looking at a currency and asking these 3 questions, and each one of these questions has only 2 answers to them. The first question is, what did price do overnight? Second one is, where is price now? So you come to your charts, you open them up. Let's say you're looking at the euro. You say, what did price do overnight? And we're going to look at some. Where is it now? And what do I need to see this price do in order to execute a trade? These 3 questions are the backbone of the 20-second plan. So everything you do hinges on your answer to the first question. And yes, that's all. So let's look at this trade plan. I need to move this out of my way. So this is from last week in the New York planning session with me. And this, took 20 seconds to do. And we said the first question, what did price do overnight? Oh, it's in a clear directional move long. All right, where's price now? Oh, it's up here. What do I need to see price do? I need to see it pull back into here, and then I'm going to get long this trade. All right, simple. Here's another one from last week. What did price do overnight? Oh, look, it's in this beautiful clear directional move long. Where's price now? Oh, it's right here. What do I need to see price do? I need to see it pull back, and then I'm going to get long and take this position. Or this one. This one wasn't as pretty, but it was still in a clear directional move short. Price was down here. We were looking for a pullback into here to get short this move. And then lastly, this one, what has price done overnight? Well, in this case, in the AJ's case, it just ranged. It tried to break out several times to the upside and just failed continuously. So we had a range, and we were looking to buy or sell the breaks. Yeah, but Kim, will this work for me? I'm not really sure. Well, let's look at some trades that you could have done easily. It took us only 20 seconds to plan this trade. We saw that the dollar CAD was in a clear directional move long. We knew where price was. We knew we wanted to execute right here. You can see I'm in this trade with a 10 pip stop. And, whoops, and here's what happened. The trade takes off and moves up towards our levels. Our template actually prints the trade levels that you want to take profits at on your charts once you open a trade. This trade hit 32 pips. Here's another one. This only took us 20 seconds to plan too. We had a clear directional move long. We knew where price was. We waited for that pullback and we executed the trade, put a 12 pip stop. And here's what happened. Price moved off that. Beautiful. The pound yen to the upside here. Beautiful, clear directional move. I mean, it should be obvious, right? We saw the pullback. We knew where to get in. We got in using a 12 pip stop. And this is what happened. This trade moved up beautifully, brilliantly up into our levels and hit 63 pips. Here's a range. This one we were waiting to either buy the break or sell the break. This happened to break to the downside, an RBO, range breakout. We took this trade, and this trade ended up hitting 30 pips. It didn't quite make it to target, but I kept moving the stop down and ended up trading it for plus 30. So do you think you can see yourself doing this every time you sit down to trade? Asking those three questions. What did price do overnight? Where is it now? And what do I need to see price do in order to execute a trade? It's simple and it works, and it will work for you. Here's Ray. Ray's been around. He's been with me since the inception of PATI. And he said, just wanted you to know how much I appreciate what you have taught me. I see a chart and I see something completely different than before. Thanks again for everything, Kim. Thank you. So here's a quick recap of strategy number 2. Using our 20-second trade planning process every time you sit down to trade has the big benefit of completely changing how you look at any chart, and it puts you in an ideal position to know exactly what to do and when to do it with minimal effort. So now let's move on to strategy number 3. Ditching your indicators will place you at an unfair advantage over other traders. You might be saying, really? I don't know. So let's look at a few indicators, but maybe you or traders have spent countless hours on the weeknights, the weekdays, the weekends trying to learn how to use an indicator, reading about the history of the guy who created the indicator, how to adjust and tweak them, or maybe how to apply different versions on different time frames. Just talking about all that kind of gives me a headache these days. And here's some of the most common ones that we've all seen or used, or if you're new, you have not yet seen them. But for me, I have a stop on it. It's like, oh, I don't want to look at any of those. So what do you see when you look at this chart? I'm just curious. Some people, I don't know, it looks like an acid trip. And to others, it might just look like chaos. And to some of you may be saying, hey, that's just like my chart. I know exactly what to do. Well, here's what Mark Douglas says about indicators. In fact, he was conducting a live seminar and he asked his participants an important question about indicators. And the question was this: why do traders gravitate towards indicators? And his answer: because they are trying to avoid losses. He went on to say most traders don't put on a trade until they have convinced themselves that the trade will work. The typical trader does not really accept the risk of trading, and only the very best traders accept the risk. So if the reason traders are using indicators is to convince themselves the trade will work, they're placing themselves in a mind state that is actually pushing themselves further and further away from the category of being in the very best traders. Meaning, if you're relying on indicators too heavily, you are most likely not willing to accept risk, and you are trying to prove that when you take this trade, it is going to work. So here's what Tom Willis said. Traders in today's environment, and he said this quite a while ago, see rapid success when they use price action strategies. But I would only ask you to give up your indicators because I realize it could be scary for some traders. And, it's different in the stock world or the E-minis or any of the other markets. But in the Forex market, I'm specifically talking about giving up your indicators. And I would only ask you to do this if you want to wake up excited to trade like we do, free up your weeknights, weekdays, and your weekends, feel more confident when you place and plan a trade, and know exactly what to do and when to do it when you look at a chart. So after 6 years of failing with using indicators, LP gave them up and she started making money. My successful and consistent trading started after 6 years when I joined PATI. So happy and grateful to Kim. And LP is still with me. She came to the Price Action Traders Institute at inception. So if you're interested in joining over 1,000 PATI traders who have come and gone, or some who are still with me, who have removed their indicators and love trading again, I invite you to do that. And once you do, I have had so many people say, I wonder why it took me so long to do this. So just look at these charts because I think they're important. Look how clean our template is. This is screenshots of some trades that I took that have just this beautiful, clean template. There are no indicators. All you're seeing is where I executed the trade, my protective stop, etc. and then this one. I mean, just using a news trading strategy to get into these trades. So a quick recap of strategy number 3. Ditching your indicators will put you at an unfair advantage over all other traders simply because you will no longer be bogged down by having to use them. So let's quickly recap the 3 key strategies. 1, use predefined tight stops. Remember, 8 to 12 pips max, and low leverage, a quarter of a point to 1%. 2, quickly and easily plan your trades in 20 seconds or less. I showed you how we do that with our 3-question process. And number 3, develop the mindset of a confident trader by letting go of your indicators. So if you have any questions, before I get to those though, I want to just thank you for listening to this brief presentation. And I hope I have inspired or motivated you to think differently about your Forex trading. And I have a special package for attendees that if they are interested in what we do and how we work with Forex traders, I'd like to promote that to you right now. And you'll have access to our Command Your Trading online course and 1 month in the PATI membership. And I've built this educational platform that is designed to help train and support and drive success for traders interested in becoming consistently profitable, all in one place. My training is going to give you the confidence you need to be successful very quickly. In fact, experienced traders who have come through either the membership or through our course have learned this method in less than 7 days. And others maybe take 60 to 90 days if they've had some experience trading Forex. And others, it may take a little bit longer, especially if you're brand new, but it will help you eliminate years and years of trial and error. So let's take a look at what's inside the course. There's 2 tracks inside the course. There's the main track and there is the beginner's track. And for traders who are experienced and have gone through the beginner's track, the main track is where the meat of the course lies. So let's start with that. There's a 10-module video training. There's MP3s, so you can download all the training and listen to it on your phone, either while you're working out, gardening, whatever you like to do. There's over 20 checklists, blueprints, and flowcharts for handy reference that you can print out and keep on your desk while you're getting used to the strategy. And there's a bonus in there, a PATI Red News trading strategy. We have a very specific way we trade red news, especially in the New York session. And then we also give you our MT4 trading template. And of course, there's email support for everyone. And we're really diligent and we really care about responding to people's emails and their questions, because we know that if you have a question, you want an answer and you don't want to wait a week for someone to get back to you. You also have a library where I did a few, I think it's about 6 webinars for course owners specifically in there that you have access to. So in the main track, we're just going to quickly go through these. The first module, module number 1, jumpstart your trading. And those are all the things. Now notice these modules aren't super long. The long one, of course, is risk management. Module number 2 is wake up excited to trade. Module number 3, we go in depth. I go very in depth about the art of risk management. Module number 4, the 20-second trade plan. Module number 5, let's trade the clear directional move. Module number 6, we're going to talk about everything about trading the range breakout. And we have very specific rules about re-entries and also what's a failed breakout. Module number 7, booking your profits. This, of course, is the number 1 question I get. Where do I book my profits? And I give you some methods and who's best suited for each one of those methods. Module number 8, 3 important candlesticks. These 3 candlesticks are not patterns, but they are specific 1 candles that happen. The changeover, the change of direction, and a momentum candle. And I just teach you how to use them in your trading. Module number 9 is about tracking your performance. You have to have something to benchmark yourself with. And I teach you the easiest and cheapest way to keep track of your trades. You don't have to buy any fancy software, because we have found that traders who buy fancy software don't use it. And it doesn't really help them. So I show you a way that we use, a lot of us use, to track our performance. Module number 10, bring it all together and talk about steps going forward. The beginner's track. So this is for traders who are brand new to Forex or someone who has never traded before and wants to start with Forex. So there's 6 modules in this videos, and there are also MP3 that you can download. You also get specific checklists and blueprints and flowcharts for this specific track. We also give you the MT4 template. And in this section, I actually walk traders through downloading it, installing it, and setting it up correctly. So you watch me step by step how to get your charts all set up. And then also you get an introduction to the Red News Trading Strategy training that is in the main track. And of course, always email support with that. So in the beginner's track, module number 1, it's welcome to Forex. So I lay the groundwork, the most important, no fluff things that you do need to absolutely know. Module number 2, let's open a trading account. You're going to watch me open a Forex trading account and listen to my broker recommendations for doing this. Module number 3, fun stuff, learning how to place trades. I'm going to show you some of the basic tips and tricks that we use on MT4, getting you comfortable on your charts and helping you place trades. You're going to watch me do that. Module number 4, we're going to get into risk. We're going to have a real talk about real risk. We're going to set some expectations for you. And we're going to talk about managing your time, your money, and your sanity. And then in module number 5, cultivating that trader's mindset. And we're going to prepare you for success, which begins in our mind. And then, of course, module number 6, we bring it all together in a congratulation module. So now in the membership, so the PATI membership is separate from the course. So we just talked about the Command Your Trading course. It has 2 tracks, the beginner's track and the main track. Then the PATI membership is a monthly thing, and that's completely different. In the PATI membership, you can attend 6 live trade planning sessions, 3 New York sessions with me, Tuesday, Wednesday, and Thursday, or 3 sessions for the London session with Kevin, 3 mornings a week, Tuesday, Wednesday, Thursday morning, London. Follow me and Kevin live on Twitter immediately after the planning session is done. So we actually go out and we trade what we plan and we show our results out on Twitter. We have 2 to 3 live monthly Q&A sessions, typically on Wednesdays. I do 2 of those each month and Kevin does 1. You have access to a video library with over 100 training sessions. So there's a lot of topics that traders or questions that traders ask me, and we have a catalog of all of those questions. Of course, there's email support, just like there is if you buy the course separately. We also give a lot of email support attention to our membership. And then really, it's a Forex community or group of traders made up just like you who support you. So you have people, with having your back, so to say. So on the right-hand side of what you're looking at, you're looking inside the members area. So this is not inside the course, but this is inside the PATI membership. And this library of training sessions, we have a category called Trader Psychology. And in that section, there's past webinars because we do a lot of training on mindset, because obviously that is one of the most important things. Once you get the criteria down, you get the mechanical application of it down, then we move up into the next level, if you will, into your mindset, because this is where traders seem to fall down, right? And in fact, if you'll notice down here, right in here, I don't know if you can see my mouse, but Mandy did a session with us. She was moving house last year, so it was a little bit disjointed. But Mandy, who's also going to be a speaker later today and spoke on Monday, we had her as a guest speaker. In the bottom section here, what you're looking at is this is the archive where we put all of the planning sessions. So there's a category for New York trade planning sessions, and there's a category for London. So you can go back and look at a trade planning session, say after the session, and you want to compare your trading to what the trade plan called for. You can kind of benchmark your performance against that, right? And there's a lot of other things inside the members area, but I think those are the key important things. So here's what I'm offering this group today. Access to the Command Your Trading online course. It's on our website for $9.97 plus 1 month free in the PATI membership, which is $197 for $1,200. Now, back in October, so what, 4 or 5 months ago, we offered this exact same package to a private group of traders for only $597. But because David and Anka were kind enough to invite me to this, I wanted to give everyone here a bigger discount for this week of attendees who are listening to the Women Teach Trading and Investment series and save $700 and pay only one fee, $497. So if you're ready to save $700 and join us today in the Price Action Traders Institute, you can get the course and get 1 month in the membership for only $497. You can do it by going to priceactiontradersinstitute.com/women traders offer. And if anyone has any questions, I'm happy to take them now. But before that, if you have any questions and you are watching the recording, maybe you can shoot an email at info@priceactiontradersinstitute.com. And you can also find me on Twitter at priceactionkim. All right, I see David put that in there in the chat. And the info. So thank you for attending this workshop, and thank you for attending the entire week of workshops or listening to the recordings. And if you join us today and want to save $700, I look forward to seeing you in the planning sessions and actually working with you. So again, it's priceactiontradersinstitute.com/women traders offer. And if there's any specific questions, why not trade currencies on a regulated exchange? I'm not sure I know what that question means, so I'm sorry. So we're retail level traders, and we trade at the retail level, not at, say, a bank level or a fund level or a private family. So we are stuck at the retail level trading with retail brokers and exchanges. Futures versus Forex. Yes, I've done that in the past. I have traded that, but we like the cash market. So, and a lot of traders don't have the full financial backing to trade the futures. But that is a possibility. Definitely. Yes. Does my brokerage accept Canadians? Yes, absolutely. In fact, Canadians have better choices of brokers than we do in the US. Pretty much we're limited to 2 or 3 right now. Adrian says, do you use supply and demand trend lines, fibs? Absolutely not. I use none of that. In fact, I don't know, maybe you just joined us, but I had a whole section. The last section was really on ditching all of that stuff. And here's, a lot of the reason why is that it gets overwhelming for traders, and it got overwhelming for me. It's like, because I have traded supply and demand, and I've traded trend lines, and there's so many different trend lines, right? And fibs, there's a lot of different Fibonacci's. Now, if that's your thing, congratulations to you. But I have found working with Forex traders and for myself, I created this method. We've eliminated all of that. We trade on, I want to say sit, we trade on one time frame, the 15-minute chart. Everything is done on that 15 minutes. And like I mentioned, we close our trades at the end of a session or before a session ends, so that we never have to worry about a world event blowing up the markets or blowing up our accounts. or like when the Swiss franc was adjusted unexpectedly overnight. I think this was back in 2015. So many traders lost their accounts because they were holding trades overnight, and brokers went bust, if you remember that event. Or if you've been trading as long as I have, when Saddam Hussein was captured on a Sunday, there was huge gaps in the market that like decimated people's accounts. So we close trades before we walk away for the day. We never hold a trade overnight. And in fact, I recommend that if you trade the London session, you do not trade New York too. So you don't roll from session to session. Because what happens typically to traders and to anyone, if you do too many of these sessions back to back, you're going to fall into decision fatigue and you are not going to be at your best. You will not be sharp. And in fact, during one session, a 2-hour session, sometimes you can reach that level of fatigue by making decisions quickly, especially like yesterday when it was an extremely volatile market and things were moving and plans were changing right in front of our eyes. Okay. Those are good questions, though. Do spreads hurt your bottom line? Well, obviously, if you don't have a good risk to reward ratio, which we talk about in the course and in the membership, then yes, at some point you will. It will hurt you. But we use a broker that typically we're going to use a commission broker so that we get the tightest spreads possible. Now, where spreads can hurt you is obviously in a red news event or something unexpected like we saw yesterday with the Fed dropping the interest rate. That can like wipe people out very quickly and take you out of a trade. So because we have tight stops, so let's say you were trading the euro yesterday and all of a sudden the market turned on us, your stop would have been hit quickly, 8 pips, you would have been out. And then you would have had to quickly, if you wanted to, reassess what was happening, and you could make a decision then to take further action if you wanted another trade, in other words. But we use a commission broker because then that keeps the tightest spreads possible, except for volatile times. Adrian says, why don't you use a fixed spread broker? I don't know of a fixed spread broker anymore. We used to have them. But even with a fixed spread broker, I had some experiences back in the day where they would just rip through your stop. So I had an instance where I was short the euro, and I can't remember what happened, but there was something, a shock to the market. And at that time, I was still trading with kind of wider stops. It was like around 25 pip stops. And what happened then was the market blew through my stop. And actually, they didn't take me out until like 100 pips. It was devastating to me. So there have been instances way back in the day, but it doesn't happen that much anymore because there's a little more regulation on Forex brokers. You know, it still is somewhat the wild, wild west with them, but they're a little more regulated now. And so you don't get as much slippage like that, like 100 pips. It's like, what? But again, if you're trading with low leverage, if you don't over leverage, you can withstand a shock like that or a broker running through your stop. Hey, Judy. Yeah, a commission is typically $1 per pip on a full lot, which most traders aren't going to trade with when they begin. They're going to trade with a much smaller position size. So it might be, you know, as low as 10 cents if you're going to go micro. And then there's mini, and then there's standard. So it can be on the low end 10 cents to $1 to $10. You haven't found a broker who will deal with Canadians without a building on the Canadian soil. Huh. Okay. That's surprising to me. So have you tried like a Pepperstone, which is in Australia? It's unless they've changed the rules with Canadians. That's one of the brokers that a lot of our people use that live in the UK and Europe and even Asia and Australia naturally use Pepperstone. I can't use them because US we can't. I mean, I don't know. I haven't heard that Owanda, who I trade with, will not take Canadians unless there's some specific rule that I am completely in the blind about, but I'll look into that. If you want to send me an email, Judy, at info@priceactiontradersinstitute.com, I'll let you know what I find out, just to prompt me. All right. Good questions in this group. Thank you for attending and thank you for asking questions. And if there's nothing else, David, I guess I don't even know what time it is. How long has it been? I'm not used to.